Hey everybody, I'm Rick DeLuca with the DeLuca Real Estate Group, and I'm here today with
Chris Bussey with Apex Home Mortgage.
And what we're doing today, as always, is we want to give you information and value on what's going on with the market now, how is it affecting regular people buying a home, selling a home, as well as investors. So today we're going to be talking about a topic that everyone's going to be looking at planning ahead, and that is the new loan limits, and two, something that recently changed in lending with multifamily.
Correct. Yep.
All right, Chris, why don't you take us through what are the new loan limits going to be and when do they take effect?
So effective right now, you can actually do a new conventional loan with a max loan amount of $750,000.
Okay.
So that's up from 726 and some change. So not a large bump compared to what it was maybe last year, but it's still a good increase on what that new conventional loan limit is. So that means basically that anything over 750,000 now would be considered a jumbo loan, and anything under that is going to be considered conventional still. So it's always nice to try to get people into the conventional loan over jumbo, just from a easier qualifying standpoint.
Yeah, so that's like if you bought $1 million home, but if you put 250,000
Still a
down,
conventional loan.
you're still a conventional loan.
Exactly.
But if you borrow 752,000,
You're now into a jumbo
loan,
Exactly.
which is why don't you? What's kind of the negatives of that?
There's not as many negatives these days. Jumbo loans do have a few more stricter requirements than a conventional loan does. Let's say you're self-employed, you typically are going to need at least 2 years of tax returns, whereas on a conventional loan, it's very likely sometimes you can get away with 1 year. Little things like that. Maybe the reserve requirements are less, like how much you have to have in the bank after you close on the loan. On a conventional loan, there's less requirements there for the most part. On jumbo loans, you typically have to have minimum, usually 3, 6, 9, 12 months reserves over and above. So the jumbo loans are just a little bit more cumbersome from a underwriting standpoint.
Yeah, so if you want to stay conventional.
Yeah, that's usually what we try to do.
Okay, so we got those new loan limits. Now, that applies obviously to single-family homes, not investment homes. You have to live there, primary homes.
Well, conventional loans in general, yeah. The ownership piece doesn't matter. It could be an investment property or second home or conventional, yeah.
So the investment property though would be different in that let's say a single-family home. What's typically different there with an investment property?
So down payment is the big one. Typically, if you're going to be purchasing an investment property these days, the minimum down payment is 20%.
Mm-hmm, okay.
But you typically want to have ideally 25% down these days to keep the rates a little bit lower cost, I'll say. A lot of times there's a high discount fees that come along with investment property rates,
right?
Especially with 20% down.
It's a little higher.
You can avoid that extra
interest
cost.
Rates, things like that.
Exactly. And then so with primary homes, you typically normal market rates for a conventional primary home these days.
Okay. Now, there's something that changed in lending that we just kind of saw.
Yeah, we just had a nice guideline change coming out that's going to really help people that want to try to invest in multifamily homes. So the change is going to be minimum down payment on 2, 3, and 4 unit properties is dropping from, say, 15, 20% down to a minimum of 5%. So if you want to purchase a multifamily home and you're going to occupy one of those units, you can put as little as 5% down.
Oh, wow. Okay.
Technically starting right now, those loans can't be delivered to Fannie or Freddie Fannie Mae until after November 18th.
Okay.
So we're just about a month out.
So get on it, start looking at it. I mean, it's been a big thing this last couple of years, house hacking. Everybody's talking about it. It's on all the podcasts and all the different investor groups, and a lot of people have taken advantage of it. But the thing is, a lot of people have been wanting to go with FHA because it's only 3.5%.
Exactly.
And then conventional was
15 to 20% down.
15 to 20%. So now we're looking at a difference between 3.5% and 5%, which a lot of people a lot of sellers prefer getting an offer with a conventional loan, right?
Sure.
And then as far as from a lending standpoint, if you can if you can go from FHA to conventional, what's some of the benefits of that?
You're losing that 1.75% FHA funding fee, which is quite expensive, especially, multi-unit homes are going to be in the higher price points.
Right. Duplexes, triplexes.
Yeah, I mean, you're typically going to find those in the Phoenix market here at a little bit higher price point than a single family home. And so if you have to do that FHA loan on something like that, 1.75% of the sales price adds up real quick. That's a fee that goes directly to FHA. So going conventional, you completely avoid that, and now you can get into a multifamily home for much less out of pocket these days on a conventional loan. It's going to be a win-win because, like you said, a lot of people are out there looking at that right now. Homes are the affordability is such a challenge for people.
Absolutely.
To be able to buy a multi-unit property, have a renter built in there to help with the overall payments until
Yeah.
rates drop is just huge.
That's the thing. It's like a lot of people who want to do the house hacking. It's they want to buy, but they don't have a lot of money down, and then they're struggling with the payment. So now you got someone to pay rent. So that's fantastic. That's step one.
Yep.
Step two is always the hurdle has been that down payment but now we moved that up to only 5% with still a conventional loan. And so as you build equity, what I think is one of the biggest advantages of this change is now you get in at 5%, but you're not locked in that FHA loan.
That's huge.
So you can, if you've got that, especially like before, if you had a low interest rate, obviously now they've increased, but if you had that low interest rate, you don't want to change it. You wanted to get, because the advantage is you only get in at 5%, but then you got that mortgage insurance, that premium
It can
that
go
you're
away
paying.
on a conventional loan in the future.
Because you're paying it until it's 20%. So then once it's 20% and you had an FHA, you had to completely
You have to
refinance.
refinance.
You get a new interest rate. You don't know what it's going to be at. And so now we can get in, lock in that rate, and keep it. And
Until rates drop, and then look
Yeah,
at refinancing
and then
down the
refinance.
road. So,
but we don't know when that's going to happen.
No, we don't know when that's going to happen.
But if the property increases another 15%, get rid of that mortgage insurance, and then you're in a good situation.
Yeah.
Because now you're really, if you're not cash flowing, then you have the opportunity to cash flow because you got a renter on one side, your payment just went down.
Yeah.
And
there's much greater opportunity to build wealth there when getting in for a lot less out of pocket, and in the future home prices increase. It's going to put these people that are looking to do the home hacks and just be able to have a home that's much more affordable because you have that built-in rental income coming in. So it's going to be a great change. And again, it's available right now. You can technically start. We can do applications for those today.
Just can't close on the property.
You can close because we're only about 30 days out now.
Okay.
So you can technically even close in the next 30 days because we're literally
right
30
there.
days out. And then the lender will just deliver it to Fannie after the 18th. So,
deliver.
yeah,
Okay.
Exactly.
Perfect. All right. So if you're looking for opportunity, these changes are great. Absolutely discuss it with Chris. Give him a call. And if you need any help with guidance on the purchase, let me know as well. So, all right. Thanks a lot, Chris.
Rick. Appreciate it.